right, everyone. Welcome and thank you all for joining us for this episode of the Crexi Podcast, an insider's look at all things commercial real estate. This show covers a broad range of topics that cater to CRE newcomers and industry leaders alike. I'm your host, Ashley Kobovitch, Regional Director at Crexi, a comprehensive digital commercial real estate platform designed to empower CRE real estate professionals with the tools they need to discover and transact property. Today, we are thrilled to explore what the next year holds for multifamily investment sales with Dan Blackwell. So, Dan has specialized in multifamily investment sales since 2008 and currently leads the Orange County Multifamily Investment Sales Division for CBRE. He and his team have closed over $1 billion in multifamily property sales, which is over 350 transactions and continuously growing. Dan is dedicated to adding value to his clients so they make the most prudent business decisions with their multifamily properties. He believes an investor's interests are best represented through relationship founded on trust and strengthened by longevity. Dan is frequently quoted in the media about his thoughts on multifamily real estate trends and his recent transactions. His YouTube videos and on-camera guest interviews offer investors critical information and insights to help them become better multifamily investors, owners, and managers. Dan has graduated from the University of North Carolina, Wilmington with a degree in finance and is a member of the National Association of Realtors, NAR, Certified Commercial Investment Member, or CCIM, the Apartment Association of Orange County, AAOC, and Apartment Association California Southern Cities, AACSC. Dan, welcome to the podcast. Let's dive in. How are you doing today?
I'm doing great. Thanks for having me, Ashley.
Of course. Those last acronyms were a lot, but I'm really excited to have you on the podcast, an extremely distinguished colleague and a great person in multifamily sales. So I'm very excited to give our listeners a lot of your insight.
Well, thank you very much.
Of course. Our first topic, I know we went into your bio a little bit, but I'd love to walk through your career path in your own words. So how did you first get involved in commercial real estate?
I first got involved in commercial real estate in 2008, and I was 25 at the time. And I originally was raised in North Carolina, lived in North Carolina, sold real estate there for 5 years up to 2008. And we hit the crash early. I was living in Wilmington. So it was a tertiary market. It felt the correction right away. And I was selling land. There was no income coming off the land. There was great upside potential, but during down periods, you were basically feeding the properties and there was no income being generated. So a lot of people that were weathering the storm had income producing real estate, and a lot of them had multifamily real estate. Everybody needs a place to live, and that's definitely not going to change anytime soon. So I decided to restart, get into a bigger market that's specialized, where I could specialize in multifamily. It was hard to do that in a small town. So I got in my car, drove across country to Orange County, and never been to California before. And I started brand new in 2008. Everybody needs a place to live. And then also buying a home in California is very, very expensive. So there's going to be a lot of people that are going to end up renting here for a long period of time. So it was a great location to be in. It was a great product type to be in. So I did my homework and just went for it.
That's awesome. I mean, Orange County from Wilmington. I love North Carolina, but I think that maybe you made the right choice. I'm partial. I'm partial to California, live up in LA. But that's amazing and a great choice that you made. Let's get into some of the challenges. So what were some of the biggest challenges joining the industry during the great financial crisis?
There was a lot of challenges for me. One was just that literally the day I joined was September 15th, 2008. And that was the day Lehman crashed and all the markets basically froze. And we all knew the market was tough, but then it just got really tough, and just a lot of people didn't need to sell. We were in multifamily real estate in Orange County, and there wasn't a whole lot of distress. There wasn't a lot of REOs. There wasn't a lot of people. Rents didn't really fall. Values came down 20-25%, but there wasn't these drastic hits. So people held on, and it was really worse for brokers because there was very little transactions going on. So it was just hard in that sense, but then also everything was brand new. I didn't know any streets. I didn't know schools, buildings, relationships, zero. Literally showing up and, having an accent and not really knowing what's going on. Those were challenges in itself. So when you kind of couple those two together, it sets up for some challenges, but it was worth pushing through. Yeah. So.
Absolutely. And I'm sure you're grateful that you did push through. That's definitely challenging. How do you think that going through that and just deciding I'm going to stick with this has prepared you for, the success that you've seen on your journey?
I would say it was a good time to enter the market. And because you did have to learn how to really work hard, add a lot of value. A lot of things didn't come together. Things fell apart. But it was a great time to build relationships within the industry. A lot of people needed good information. And looking back, I'm grateful I started in a big downturn like that. But if what I was able to do was just whatever I was doing in 2008, 9, 10, getting in front of as many owners as I can, adding as much value as I can, working very hard, being very diligent through a transaction process for our clients, I never modified that. So when the market started to pick up and move, we quickly grew.
I love that. You got to learn the grit early. You got to learn the hard work early. One of my first sales jobs, we had to make 150 dials every day and be on the phone for 4 hours. And that just took me to everything that I know now, and just learned all of that hard work and that determination. And I wouldn't change it for the world. So I kind of
Yep.
agree with you on that.
Yep. No, for sure. I mean, when somebody put it to me this way, I mean, at least in California, the water's cold. So if you get in the water, you get acclimated to the water. It's not as cold anymore. If you get back out of the water and go back in again, you have to go through the whole uncomfortable side of it. So if you're on the phones helping people, you're staying in the water. Just don't get out. Don't get off the phone. Don't stop doing what you're doing. And it's not as bad.
Yep, it's keeping up that momentum, right?
Yeah.
And to
Yeah,
quote a Disney movie, just keep swimming, just keep swimming.
exactly.
I love it. So what originally brought you to CBRE, and how did you assemble your team there?
It was a CB was always, in my opinion, the Goldman Sachs of real estate. I felt that it was the best in class commercial real estate firm out there, and I wanted to work for the best in class. So once I was able to understand the market, there was a business line opportunity that was open within CB, and we took it and transitioned over, and we were able to grow that business. But I think it's the biggest things. 3 things that I look at is, first having the right location and the right product type, and then having the right team. And that's why it took some time, and it was worth going from North Carolina to California. That was the right market. And I knew I had the right product type in multifamily, and it was just sticking it through and making sure I aligned with the right team. So CB, I was really drawn to CB for those reasons. There's a lot of great people at CBRE, and like I said, it's a great business card. There's a lot of great people there. So it was a clear decision for me to join CB once the opportunity opened up.
I like that. I like that. So, 2 things. I mean, I know for our listeners, we have a broad range of listeners, but some people might be looking to hire team members. Some people might be looking for new jobs. How do you find that team? You were saying you're drawing to the right people. So, are there any qualities that you look for in your team to surround yourself with?
I think the biggest thing is you got to work with honest people. Everybody's got to have aligned interests, but I think just people that are going to be very honest. When I'm meeting with somebody, if I feel that they're going to go out and represent clients, if I'm not there, and are they going to be able to best represent clients and bring that client closer to the firm versus further away? If you can simply look at it like that, and that you think they have the right skill sets, and personality, and they're ethical, they're going to bring clients closer. Just every time they're interacting with somebody, you as an agent you can't control it every time, but you can have some influence on, are people coming closer to you or are you pushing them away? So I think if we find people that have those characteristics, that's really, you can't put a dollar to that. And I feel that just when I joined CBRE, there's a lot of great people that come to the door at CBRE that also want, looking for the same things that I was looking for, to be associated with some really great people. And there's just a lot of talented people that come through CB. So I benefited through that a lot. It's just a good team fit, good culture fit, so. And then you also, I feel like, to add to that, some people that do really well in the sales business, they almost have to have a little bit of I don't know if I'd want to call it a chip on your shoulder, but you have something to prove. You have some drive, you got some fire in the belly. And those are the things that you really can't put a price on. Those are things that if somebody is around the right product type, the right team, the right location, and they have that fuel and that fire, they could be a superstar.
Oh, I like that a lot. Those are really two big attributes, I think. First and foremost is, integrity in someone's brand. So are they representing your brand appropriately? Are they bringing clients towards you versus away? So I think that's really huge. And something that I say to people that interview with me all the time is, what drives you? I can't give that to you. I can't give that internal motivation. So whatever it is, be it internal, external, you got to know that, because we all want to be hustlers here. We all want to make sure that, everything is consistently growing. So to have that, find that, and really fuel that in every single call, every single pitch that you're doing. So that's a really good reminder for us. Thanks, Dan.
Yep.
So I know we kind of talked about a little bit of your focus on, multifamily, but if you would dive in a little bit deeper on why you chose to specialize specifically in multifamily, let our guests in on that.
Well, it goes back to everybody needs a place to live.
Mm-hmm.
One of the first few real estate books that I read, it said, look, the multifamily real estate is still very functional, even the properties that were built 50, 60 years ago. Mm-hmm. The companies that maybe some of the tenants had worked for that lived there in the 50s, 60s, and 70s, those companies could be gone. They got bought out, they closed, but the apartment they're living in is still very functional and producing income for somebody. So, you're not really threatened by industry changes or technology. It's just simple. It's housing, shelter. And then coupling that with, in Southern California, they're not building any more B and C class workforce housing. So there's a finite amount of properties out there. And those are probably shrinking a little bit over time as some get redeveloped and so forth. So I think there is a housing shortage. So I think that's the reason why I got into multifamily. I said I was looking 20 years ahead, not 12 months ahead. And yep. I knew in 20 years, I felt that if I put my time into this, it's still going to be a viable business 20 years from now. So I looked at it pretty simply. I didn't go too crazy. And those things that I thought of, 12, 13 years ago are still very, very true today.
Yep. I mean, housing, basic human need, very sustainable. So good choice on that one. Yeah. What are some of the most valuable tools that you've learned, Dan, not only to operate efficiently as a leader, but also to provide the most value to your clients?
Well, I think when I first started out, I was on the phones a lot, and the other side of the phone is where you can learn a lot of information. So I constantly was always sharing information with investors and being of value, but there was also an exchange of information back to me. And if you talk to enough people and you understand, you learn what's going on. That's how I was able to come out here, not know anything, and then eventually start to learn. And it was through relationships, you helping people helping you taking that information. I mean, that's where all the value comes from. And then you can help more investors along the way. So that's a big thing, that's a big part of it.
Absolutely. And just taking in that information, right? And being able to actually learn from the market and pivot when needed, I think is huge as well.
Mm-hmm.
Amazing. So moving into our kind of second topic, talking about the future. So as we're heading into 2022, what is the current state of the multifamily sector?
Well, the market's very strong right now, and I don't see anything that is going to change that anytime soon. As long as we have low interest rates and the buyers are going to be buying. There's strong fundamentals in the market. There's no changes there. Rents are on the rise. Again, interest rates are low. It's just really poised very well for multifamily real estate. So I believe we're going to have a very strong Q4, and then entering into 2022, we see no change in that. I think it's going to be a very, very good year for multifamily.
I love hearing that. Love hearing that outlook, especially after, the kind of turmoil we've been through over the past year and a half. It's great to see that continuous positive outlook. So, what kind of transaction volume have you seen this past year as we're kind of coming out of everything? And who are the primary players? So, meaning a lot of older properties changing hands, or more people selling or exchanging out of state versus others doubling down in California. What are your thoughts, and what have you seen over the past year?
Yeah, as far as people that are buying, it's typically the private client space, the high net worth investors that have cash on the sidelines, want to get into multifamily. There's always new buyers forming in the marketplace. Then you have your existing investors that are in the space and acquiring and growing their portfolio over the years. Either they're doing 1031 exchanges, trading out of an asset. Maybe it's an outlier piece of real estate they want to trade out of and move it into something else. So there's going to be a lot of that going on. That's a big part of the market. And then there are people that have traded out of state and gotten out of California. And that has created a local opportunity in California for another investor to acquire that. So it's kind of been this higher volumes that are going on. We're, as a team, closing about a little over a deal a week for 2021. And we closed about 50 transactions thus far this year. And that is an uptick because of all the transactions that are taking place in the marketplace. But it's really led by the private space and a lot of just local mom and pop investors. And of that space, your $1 to $5 million space is almost 50% of the trade volume within the marketplace. So that's really where most of the action is going on.
Yeah, absolutely. And that's kind of Crexi's bread and butter as well. So I mean, how are you kind of finding some of these newer players, so to speak? Any tools that you're using? Is it a lot of word of mouth in your existing network? Talk to our users a little bit about that.
Yeah, I think it's just, there's nothing special. It's just relationships and having existing inventory, and that opens up opportunities. We'll sell a property to an investor and do as best we can to represent them and take good care of them. And it's a relationship business. So if you do good by somebody and they're happy with their investment, then most likely they're going to refer you to somebody, or they know somebody that might want to buy, and they tell their friends, hey, I bought this property, it's doing well, call this broker. So it's a lot of that. And then, there's just having just listings, a portfolio. Us as a team, we can all, here at the CBRE team, we can all benefit from each other's listings. So having that, everybody rowing together and having available inventory, investors are going to obviously call the agents that have the inventory, and that helps. So a little bit of a combo of those things.
Yep. And, one connection that you can transact with over and over, or getting those referrals, I mean, those are invaluable. So, again, going back to that brand, you want to make sure that every single interaction that you have with anyone, you're representing your brand, and that can be a customer for life, so to speak.
Absolutely. I mean, it's all about the relationship. The buildings trade hands, but you got to take care of the clients and make sure they're being taken care of. And if they are, then you should expect multiple transactions from investors. Not everyone, but they do come up, and we've been fortunate to be involved in a lot of repeat clients.
Yep. They always come back, they say, Dan. They always come back. That's great. How does the current state of the multifamily sector compare maybe to 2020's metrics? What'd you say?
2020?
Mm-hmm.
2020, the first, at least in Orange County, the first half of the year was sluggish. When we hit going into Q2, we hit COVID, and then there was pretty much a pause. Interest rates spiked a little bit. Some lenders backed out, and then the second half of the year was very robust, very busy. Pricing's up. I'd hate to put a number on it because I don't have that right here right now, but we're well over higher than pricing was in 2020. And 2020 was a great market. The second half of the year was a great market. Interest rates are competitive, if not a little lower than they were in the second half of 2020, and offer activity is higher than it was. So today we're seeing a lot more transactions where buyers are going non-refundable day one on deals. We're seeing a lot of best and finals taking place. Wasn't as prevalent in 2020. There was a lot of offers. We had call for offer dates, but not best and finals, investors going hard day one. That's what we're seeing now. And it's very, very competitive.
Yep, up and to the right, and that's great to hear. What fundamentals about multifamily specifically best positioned it for success, throughout the time of the pandemic?
We were fortunate because the collections were so strong here in Orange County. I think the big thing about what we were very, very concerned of early in COVID was, how are these properties going to perform? Will fundamentals erode a little bit? And they did a little bit, but not really in Orange County. I mean, we as a team surveyed the marketplace within Orange County on a monthly basis for collections, and it never dropped below the low 90s. We were 92%, 95% collected, 97%. So there really wasn't much of an erosion in fundamentals. And that's what I think a lot of investors saw and realized. It not only propped up the market, but it created a lot of investors to flock towards multifamily. So the fundamentals are why we're seeing just so much demand right now.
Absolutely. Oh, well, thanks for chatting about that. Moving on to kind of a third topic here for our listeners. So again, looking into 2022, what does the future hold for the multifamily sector, particularly in a post-COVID world?
Yeah, I'm very bullish on multifamily. It goes back down to that long-term view of the business, not a short-term view. Long-term, extremely bullish, still very bullish, even though we're in peak pricing territory. You got to look back at the things we just went over. You got, as long as rates are low and we've got strong fundamentals and rents are being collected for the most part within the marketplace, we're going to have a very good market. So it's really tough. Everybody wants to know what's the forecast, but I think we'll have a very, very strong positive year in 2022 moving forward. I mean, multifamily was very resilient in 2021, so the market's better now. A lot of things cleared up in COVID, so it's going to probably get even stronger, I think.
Absolutely.
Yeah.
Do you think that there's ever going to be kind of a slow or a plateau of the high volume of trading, or do you think it's going to continue to go up?
There's always going to be ebbs and flows in the marketplace. It's tough to say when and where and why, but there could be. I mean, previous cycles we saw interest rates rise a little bit, and that can kind of, that's directly tied to cap rates. And I think the biggest thing about this market is, historically, Orange County is not a high transaction volume market, because if I sell, what do I buy? This is good real estate, so it's hard unless they find an upleg or exchanging out of state. It's few and far between for good assets to come to the market. There's always going to be demand, or at least we anticipate there to be high demand, even in this or that. I think we're going to be very well positioned here in Orange County. So I don't see it coming anytime soon. We'll just have to see. But I would say interest rates are, something we always keep an eye on, because if things did start rising and we saw that creep up, then that could impact transactions.
Yep, totally.
Yeah.
So we're talking about a lot of positives. So what could be some potential changes or challenges ahead for the multifamily sector? And how would you anticipate investor behavior switching? So maybe construction challenges, as you were saying, we're not building a lot, or any 1031 or other tax code changes.
Well, yeah, if they did a tax change, then
Yep.
yeah, we have to do a part 2 for the podcast here. So You know, there's a lot of stuff that goes on in California and the statewide. There's changes potentially with tax code. They've always tried to do away with the 1031. That kind of flares up every now and again. But yeah, that would be a material change to all commercial real estate. I mean, if you can't do an exchange, but I don't want to speculate on it, if it's going to happen or not. I don't foresee that happening. I don't foresee a lot of big shocks going through the system. I think it's a lot to do with interest rates. Again, here in our little part of the world, they're just not building a lot. So if they were overbuilding or something like that, that could be a concern, but there's not. There has been a lot of people watching just the restrictions from statewide rent control, and is there going to be more coming down the pike? And those are things we're paying close attention to. But so far everybody's been, the market's been responding well to the restrictions that are in place. Statewide rent control 5% plus CPI. People have been living with that. The markets nothing changed in pricing. So I'm not a doom and gloom guy. A lot of people buy for long-term viewpoints anyways. So it's hard to say what might happen in a year or two.
Yeah. Well, good. What are you personally most excited about for the future of multifamily?
I mean, it's a great way to build wealth and build cash flow. I mean, the tax benefits to it. We have been able, just over the past 12, 13 years, we've helped a lot of people grow their wealth and watch them exchange up and build a portfolio or get to some assets they want to keep long-term. And, they'll improve those properties and do a cash out refinance and buy another asset and just watch all that is being created out of this. And that's exciting. I mean, to see somebody that, a few good deals can change your life, can be lifestyle changes. So I think those are the reasons why a lot of people are in multifamily real estate. So that's the most exciting.
Absolutely. And just having yourself and your team, support those type of people, I'm sure is huge. So thank you for continuing to do that. And it's exciting to see that you're excited about your clients doing that. So that's always lovely.
Absolutely. And it's great because, as you mentioned, it's a team. So it's not just me. There's so many people on the team that have added so much more value, put together transactions that I wouldn't have been able to do without them. And they have grown it and built more relationships and help more people. So that's also very exciting to see and get done. I think that's the biggest thing, is people, helping people. Yep. And it started in the bottom. It started in 2008. I mean, what are you there for? You're there to help people and you're there to add value. And it's just, that kind of trained us to just never lose sight of that.
I love looking at that and just remembering that that's the most important thing, right? People just helping people. So that was a good tidbit. Getting on to our last and final topic, a little bit of a segue here for what we were just chatting about. But what are the primary words of advice you'd give investors seeking to enter or participate in the multifamily sector?
For investors to get into multifamily?
Yep.
I would say if you're going into a specific market, I would have just an open view. I'd open up my criteria because it's hard to say, well, I want to buy in this city, and you're just going to look in that one city. There could be great opportunities within, other parts of the area or the county. So I always like to have a wide lens on what I'm going to look at and just be open, because you might find a great opportunity, and maybe that's not a long-term hold it for 20 years, but that could be a good opportunity. You could improve the value, improve the asset, and exchange it later down the road. So I always like having a wide lens. And then, it's back to the old tried and true, have good broker relationships within the marketplace. I mean, that the market's controlled by brokers. There's not a lot of transactions going down principal to principal. They happen, but it's predominantly through the brokerage community. So I would make sure I talk to a few different brokers, maybe align with one or two of them, build a relationship. That's how this business works. Be a good buyer, get an understanding of the market. Those are things that I would look at. And then I always like buying a good area. I'd rather pay up for a good area. You can fix the property. You can't fix the location.
Mm.
So I would be willing to pay up. And if you're in in the cycle where peak pricing territory, then, buy best in class.
Mhm.
I don't think you can really go, especially if you have a long-term view. I don't really see, I think that's a good business plan.
I like there was a ton of advice in there. I loved the open mindedness. I personally bought a condo recently up here in LA, and I thought I wanted a one certain area, and I was actually convinced of opening up and getting something else. So that really worked in my favor. So obviously, just being open minded, I think in general about anything is often a good way to look at things, but I think especially when you're buying multifamily. And I love where you said you can always change the property, but not the location. So taking into a lot of factors and then having a great team, right? Obviously, know the brokers, understand, get those people that you can be honest with and who are genuine and who are the experts, because that's really going to give you the best advice.
Yep. And then don't try to find the perfect deal because it might not exist.
Mm-hmm.
And if you only wait to buy the perfect deal, if it does exist, you're probably not going to be buying a lot of real estate.
Yep.
If something checks 4 out of the 5, 4 stars out of 5, that's probably a good deal.
Mm-hmm.
If it's the right price, the right location, the right condition, but it's missing something, that's still something that I would say, you know what? We look at a lot of deals on a daily basis. If something's close to what you're looking for, go look at it immediately. Go, give it a shot because it's hard to get something that just checks everything.
Dan, I thought you were talking about my dating history.
Well, if it's dating history, you need to get all 5 stars.
We need to
That's
get all
something.
5. All right.
Yeah.
Maybe that's why it hasn't worked out for me yet, Dan.
You got to open up the criteria.
Appreciate that love there. Awesome. And then kind of flipping the script here with the advice. Do you have any parting words of advice for brokers looking to become more active in the multifamily sector?
Yeah, I think just, the way I always looked at it was hopefully eventually you can transition from being a broker to a principal at some point. I think that's a goal that a lot of people have. So start at the end goal. If that's what you have eventually, then how do you want to get called 10, 20 years from now? Who are the brokers you're going to be wanting to deal with on the other end of the phone? And look at it from that standpoint and be that person today that you want to receive a call from. If you want somebody that's like super pushy and whatever, be yourself. But I think just be real, be yourself, and be the person. You're going to be on the other end of the phone one day. So who are those people you're going to want to deal with? I think I look at it like that. I'm always looking at things long term, but I think being a straight shooter and being honest. If it's a property that you don't think is a good fit for somebody and it's not a good deal, then what do don't try to jam anything down anybody's throat. I think just be honest and put their best interest first. I never put my best interest first. I always put my clients. And if you do that, then you'll be taken care of. You don't even need to worry about, anything. And just when in doubt, disclose. That's a big thing. It's like, I'm looking at it where if I've got a 10-minute call with a broker and he tells me something and 10 minutes later about a property, it's like, dude, just tell me that on the front end, I think those things will, if a broker kind of does that and keeps it real and tells clients the truth, I think that will that's the secret sauce. It's obvious, but I'm telling you, if you just stick with it and work really hard, sky's the limit.
I love that. And those kind of themes of integrity and honesty and transparency have come up a lot during our conversation. And it really does just tie back to that. So be a good person at the end of the day. I think that's really good advice.
Be a good person, but you got to have a little bit of that chip on your shoulder.
Yep.
That makes you want to work super hard and help. And if you work super hard and you're very honest, then that's a great combo.
Absolutely. I love it. Well, thank you so much, Dan. We really appreciate you joining us today and sharing your amazing insights, especially on such important topics. So I know you're very busy. Thanks again for taking the time to sit down with us today. Where can people Yeah. Where can people find you online if they want to get in touch? So maybe an email or a social media tag.
Yeah, Instagram, Multifamily SoCal,
Okay.
LinkedIn, Dan Blackwell. You can find me there, or you can shoot me an email at dan.blackwell@CBRE. But one of those places will work. Feel free to reach out anytime.
Awesome. Well, thanks for everyone who tuned in today. If you enjoyed this episode, do not miss the next one. Visit go.crexi.com/podcast and sign up to get the next episode delivered straight to your inbox. Of course, you can also subscribe to the Crexi Podcast on your favorite podcast app and check out our YouTube channel for video recordings of each episode. Take care and be sure to tune in next time.